Yeah, good morning, Kavita. I think markets are under pressure largely because of global kind of headwinds again. And I think again we have been hearing that crude oil prices have shot up. The rupee has depreciated to a new low. So I think this is the reason the markets are slightly jittery because definitely these are not very good indicators for the broader market. I think clearly markets are worried that these events could have an impact on the earnings for the first quarter of this financial year, that is 26-27. So I think we'll have to wait and watch. But I think at some point, I think investors need to take a stock specific call. There are many companies where earnings growth and the commentary has been good. So we remain structurally positive, but I think we need to be selective. So it's going to be a stock pickers market. The broader market will continue to be volatile, but I think it's better to stick to individual stocks where I think risk reward could be significantly better in the next say 12 to 15 months. So we remain positive, but obviously we have to be very selective on a stock specific basis.
Technicals, but coming to you, Avinash, how do the fundamentals look like for MRPL, say, for the next 1 year if she wants to hold it?
स्टॉक मार्केटमध्ये आता मला ट्रेडिंग करायचंय म्हणजे हा सगळ्या
No, I think, Ankita, the key variable for MRPL will be the crude price. See, in terms of the profitability, their GRMs could be impacted, if crude prices continue to rise. I think if crude goes to roughly about 115 to $20 a barrel, then I think profitability is going to be impacted. So I think as of now, we prefer to have a hold on the stock. I think, as geopolitical situation is now going from really bad to worse, I think it's better to stay put for some time, wait for the quarter one results, and then take a call, because clearly if crude goes around 120 or $125 a barrel, that is definitely not good news for most of the refining companies, including MRPL. So we have a cautious positive stand here, but fresh commitment should be avoided. Those who have can hold on.
Can hold on fresh commercial. That's the long-term take by Avinash. But then let's move on. And we have a caller from Chennai on the phone line. Kiran is there with us live. Kiran, hi, morning. How are you?
I'm doing well, ma'am. Hope you are all doing well as well.
All good. Thank you so much for asking and sending us your question. Our guest can hear you. You can ask away.
Yeah. Hello, hi team. So I have invested in two stocks, namely one is PGEL, PG Electroplast Limited, 50 shares at the rate of 702.
Okay.
Second one is Traxon, 400 shares at the rate of rupees 80. I can hold these shares for 2 more years from now. Should I, right now both are in, I think, losses, but yeah, should I hold these or should I use this opportunity to do a downward average? That's one question. And the other share that I am also looking at is RT Industries. Is this the right time to invest in RT Industries?
All right. So let's go to both of our experts. Avinash, I'll start with you since his time horizon is 2 years, but then he's also looking at an averaging strategy. Would you recommend that?
Yeah, I think, Kavita, as far as PG Electroplast is concerned, I think you can definitely think of averaging and take a 18-month view here. I think clearly the company is now on a strong growth runway. And I think the management commentary also in the last quarter has been quite encouraging. We should see FY27 to be a much stronger year. And most importantly, a lot of marquee investors have invested in this company. They are all long-term investors. So my suggestion is that he can hold on for the next 12 to 18 months. He should definitely get a significant amount of risk reward. And as far as RT Chemicals is concerned, industries is concerned, I think he can definitely buy into the dip. My sense is that the chemical sector is slowly recovering. And despite the fact that numbers in the fourth quarter were not all that encouraging, but I think clearly the coming year should be good because obviously chemical prices have started moving up and the company has a very robust business model, a good order book. So here I think he can start buying in small sips and maybe in small pieces and gradually accumulate this stock for the next 12 to 18 months.
Right. Would you want to comment on Traxon also? Avinash, he's holding it for 2 years.
Yeah, I think, see, this is a company which operates in the medical equipment space. I think it's been a recent IPO. So here also, I think if you give the, Traction Technology is basically, a company which is into some sort of data analytical services. Unfortunately, in the last 2 years, Kavita, this stock has gone nowhere, in spite of the fact that they have got a very strong parent, a very unique positioning, as in terms of their customer base. So here, I think it's better that he doesn't invest fresh money. I think let the company perform better, and then I think one can take a review. But as far as fundamentals are concerned, Traction has not delivered the numbers what investors were expecting for a very long time.
profits? Should he book partial profits? Because the power sector is looking very good right now. Can you see more up move on Tata Power, and therefore should he be booking partial profits? How should be he strategizing on Tata Power?
I think he's bought the right stock and at the right price. So, I would suggest that despite the fact that the power sector is going to show very strong growth over the next, say, 2 to 3 years, I would believe that, he's got a fairly large quantity of 12,500 shares. So I think he should at least book out, say, 10 to 20% of his holding, try to recover his capital and stay invested for the next, say, 2 to 3 years. This way he will not only recover his capital, but his margin of safety also increases quite significantly. So long-term prospects for Tata Power and the entire power generation space looks very strong and attractive, but he needs to book out some money. That would be a prudent, strategy in this market.
Let's move on to the next question. Sanjay is writing in from Thane. He says he has 100 shares of Paytm at 650 is bought. Should he book profit or continue to hold? He's not written his holding period, but Avinash, I'll come to you. What should be his strategy on Paytm? He's bought it at 670. He's sitting at a good profit, and therefore, so what should be his strategy? Should he book partial profits or should he book out entirely?
I think he can hold on because his margin of safety is pretty solid. And I think we believe that, going forward in the next 2 years, Paytm is on a well crafted kind of growth trajectory. I think most of the overhang in the stock is over. And I would suggest that if he can hold on for the next, say, 12 to 15 months, he could expect a much better risk reward going ahead. So if he has the risk appetite, considering the kind of small quantity he has, he should hold on. He should get a better price in the next 12 to 15 months. So continue to hold.
Okay, continue to hold, Sanjay. That's the advice for you. From Coimbatore, Avinash, he has 530 shares of ITC, average price is 277. He wants to buy more and he wants to hold it for 2 to 4 years.
No, I think you can definitely think of accumulating the stock. I think the stock has corrected significantly. And I think, normally an investor makes a very strong risk reward only when, the stock is ignored. And which is clearly the case now. I think if he's got a time frame of at least 2 to 3 years, it's a steady compounder, gives fairly good dividends. And I think, markets are definitely now looking at possibly better volume growth numbers from the cigarette business and the other, divisions which actually contribute significantly to both the top line and profitability. So I would say that yes, if he's got a 2 year plus view, we can definitely nimble into the stock, use an SIP approach and slowly accumulate, for a time frame of at least 2 years plus.
All right, so that's the view on ITC. Let's move on. Murli from Chennai is writing in. He says that he's bought 1,200 shares of Texmaco Rail at 97 rupees. What's the outlook for the same? Avinash, I'll come to you. Texmaco Rail, let's talk about the railway pack as well. For the next 1 year, he's holding on to at 97. Right now, he's sitting at a bit of a profit there. What should be his strategy, and what would be your view on the railways pack in general as well?
No, I think the railway pack counters are doing well. I think particularly, companies like RVNL, Texmaco, Titagar, or for that reason, Jupiter. Texmaco is a significant player in the wagon business, has an order book of almost 3,500 to 4,000 crores. And I think, the stock has underperformed, but my sense is that numbers will definitely be more stronger in FY27. And the government is also pushing a larger investment kind of base for railway, sector. So definitely wagons are going to be very critical. So my sense is he should hold on for the next 12 to 15 months. It's a good investment stock, but I think you need to put in a little more time and patience here. The stock moves slowly, so continue to hold.
Move on and get a WhatsApp question in now from Priyanka. She says she's bought, she wants to buy Zydus Life at current market price. She's bought 600 shares of Godfrey Phillips at 2,000. Please advise for the long term. Avinash, I'll come to you. She wants to buy Zydus Life at the current price. Is this the right time to enter? And also talk to us about the 1 year expectation from Zydus and also 600 shares of Godfrey Phillips that she already has. What should be her strategy for Godfrey Phillips as well for the long term?
I think as far as Godfrey Phillips is concerned, I think clearly the stock has performed well. I think numbers have also come pretty solid. So I think, if the investor can hold on for the next 12 months, I think Godfrey Phillips can give a decent risk reward. I think the stock is a little volatile because of less liquidity in the counter, but fundamentals continue to be very strong. And it's one of those stocks which has been acquired by a lot of marquee HNI investors also. So keep invested here, stay invested here. And as far as, the other stock is concerned, I would believe that if the investor can give in a time frame of at least 12 to 18 months, then I think Zydus Life can be a good pick. I think try to build positions into the stock in a gradual way rather than putting money in one shot. It's better that the investor buys on every dip. So use a small SIP approach and gradually build positions here. You would definitely expect a decent risk reward over the next 12 to 18 months.
Avinash, can you elaborate on REITs? Maybe just simplify it, not only for Rajiv, but for other viewers also. We have a lot of senior citizens watching the show. So what kind of investment would that be? What kind of dividends are we talking about for them to earn for, in terms of pension?
No, I think this can be a small part of an investor's portfolio. I think REITs are basically tradable kind of securities where the real estate is actually sold under this platform. And I think there are many companies like Embassy which already is traded in the stock market. There are many other REITs also. So I think if the investor plans to invest in REITs, he needs to take at least 2 to 3 year call, because these are not like typical direct equity stocks. The returns are measured in terms of the project viability, in terms of the kind of income the project earns, and the best part is a majority part of the profit is distributed back to the unit holders. So it can be a good mature kind of asset allocation. Maybe 10% of your portfolio typically can be allocated to these REITs. I would not be surprised that the investor can safely assume that these returns could be much better than maybe bank FD returns. So in that perspective, it definitely could prove to be a good investment, provided the time frame is at least 2 to 3 years.
All right. Sunil is writing in. Sunil Kumar from Bhopal is writing in. He says he's bought 10 shares of MRF at a bank price of 4,200 rupees. He's been holding it for the last 20 years. Company has not come out with any bonus split, bonus issue or any stock split. What should he do? Avinash, I'll come to you. He's clearly sitting at a huge profit. But since he's been holding it for 20 years, does the premium really hold true? And what should be his strategy going forward? Should he now book his profits? Because it's been fairly long enough that he's been holding on to this share.
Yeah, I think, he holds only 10 shares. And I think the reason the stock has gone up is largely because of two factors. One is, of course, the fundamentals have been good. But again, the liquidity in this counter is extremely thin. I think it's just got a equity of 3 crores. They have not, given any bonus. And, the company does not, is not fairly investor friendly, because we hardly find that this company does not do any analyst meets or conference calls. So I think he should book out profits, because typically, I think this kind of upside in a span of 20 years, he can obviously reinvest in some other growth sectors where I think he gets an opportunity to participate in some other companies and other sectors. So I think it would be prudent enough to book out profits, but obviously, keep the money invested in sectors like, say, capital goods or banking or auto, where I think definitely growth numbers in the next, say, couple of years should give him a decent return.
Question is coming in from Delhi. Ghoshtada wants to know about Oswal Pump and Shakti Pumps. He's bought both of them. He's sitting in profits. He wants to know if he should be buying more. I'm not sure about time duration, but Avinash, would you like to go for this?
Yeah, I think as far as Oswal Pumps is concerned, I think the stock has corrected, from its previous high, and I think they operate in the solar pump category. I think clearly a well-established player. So my sense is that yes, over the next, say, 12 to 15 months, I would not be surprised that volume growth could definitely kick in, and you could expect a decent kind of risk reward. The other stock, Kavita, what was the other stock?
Shakti Pumps.
I think in case of Shakti Pumps, he should, wait for some time. I think my sense is that there has been some margin compression, and I think there the stock seems to be fairly valued. So I think as of now, I think Oswal Pumps can be a better bet if he's looking to put fresh money over the next, say, 12 to 15 months.
Thomas from Chennai, he's got 100 shares of SRF and bought at 1,600 per share. He wants to know what should be done, assuming it's a long-term buy. Avinash?
I think, from a long-term perspective, I think you can definitely continue to add positions here. We believe that, this is a very strong structural bet. I think very strong fundamentals, very strong business model. So I think keep a time frame of at least next, 12 to 18 months. I think definitely you could expect a decent risk reward.